I mean, very simple, I mean, it's a very simple seminar. It's a kind of repetition because nothing unexpected have happened in the market since the last forum, and then since Sunday. I mean, technically, all the accounts that have been working as expected, and nothing really had changed. I want you guys, I tried yesterday and the day before to pass the message that there is a combination here which is little. Believe me when I say that. I don't have a bio, so I care less where the market goes. I just want to make it in my account. So, technically speaking, you have a powerful move yesterday on the S&P. Luis, this is the cash one. I know you have an issue with the S&P charge. This is a cash one because I used to carry both of them, the cash and the ES, and I draw the conclusion that the cash one is better than the ES. I don't know, don't ask me why, but goes correlate better with everything. Now, this is the S&P. It did a very powerful move yesterday in 5 ways here. A complete correction can be labeled as a complete correction. A, B, C, A, B, 1, 2, 3, 4, and a 5. Like I say, repetition. RSI giving you divergency here. If this is a count, it is complete, then the S&P is going to consolidate right here, and most likely the S&P is going to explode to the upside. I mean, it's going to explode to the upside one of these days. I know, but don't ask me why. It's going to explode to the outside one of these days. Now, yesterday on the video, we say that what is important now is this decline. Let's take a look at that decline. I mean, I got the biggest correction in the middle. But if you take a look at the RSI, it's giving you the divergency in this leg right here. So the next is taken out of the picture right there because this went deep about this peak. So it's not bearish. It's not bearish to the downside. I can go and say that unless it is 1, 2, 3, 4, 5 to make a 5 right here as a type of leading diagonal, but also right here the biggest momentum comes in the first leg. That's very, I mean, technically speaking, what I expecting on the S&P is another leg, most likely right here. If you take a look at the last leg out, it did the same. You see, a powerful move and a small consolidation. Not even to the 3802, not even to the 3802, and going higher. So, in my personal view, still can be another leg down here, but at the end, it's going to be the same result. At the end, no matter if it is the flat in the middle, no matter if this is B, that B is going to happen. And that's something that I've been telling for the last 2 weeks. We know we're going to get to 4. How? Nobody knows. When I say that is you got to be ready. If you're going to be long risk, don't over leverage the risk. Yet, you better wait for confirmation that the market have turned in favor of risk. This is a great point together with oil. I don't know if you guys follow oil. Oil is very bullish. So, either 3 scenarios, like this, or we three-way to the downside. For me, the S&P is bullish. Sorry if somebody do not agree with me. This is bullish. This cannot be counted as a 5 due to the fact that the 3 is the small one. So it's bullish in my view. In my view, the S&P is destined to break and minimum go to the 1308. And all the counts, they're going to be favoring the bullish S&P. Now, that's one of the weapon that is lethal. I mean, technically, you got a bullish S&P. Now, this is another one. The daily dollar. What do you have in the dollar? 1, 2, 3, 4, 5 swing. So a healthy correction should be if this is a leading diagonal. If it's a double zigzag, do not matter. After the W here, another healthy correction to the downside. So that combination of the S&P and that combination of the dollar made the case for a move taking place in favor of the risk, I would say no later than in 2 weeks, if it's not taking place already. So, because nobody knows, there is this leg right here can be seen in different scenarios, so nobody has the exactly time to know when it's going to happen, and there is different avenues that can be seen in an S&P and in risk in general. So, having said that, let's move on to the euro pretty fast. 2 scenarios on the euro. The most bullish of all, that we finish here, the less, I'm going to cover the dailies and the weeklies, you guys know already, that we finish here, A, and we're going to go higher in 3-way. Something like this before going lower. The bearish euro is a fat. The bullish dollar is a fat. Now, this is a scenario when this was instead of W, this was E on the triangle. If what we have is W here, this can be completed, and then we're going higher. Now, let me explain to you guys this little part right here. That little part right there, my favorite count goes like this. This is my favorite count right there on the euro. And I'm going to explain it to you guys why. And you guys going to drop, like always, your own conclusion. It's not having a bias. It's being practical. This is my favorite count as of right now, as of this morning. I want you guys to follow it with me. What do you guys have? 1, 2, 3. That's a swing. S. 1, 2, 3. That's another swing. So technically, you got right there, I believe that 2 equal legs makes 1 swing. Let's call this swing W or 1. What else do you have? 1, 2, 3, 4, 5. When each leg can be laboring as a 3-way move. So it's either 1 or W, right? Now, this W, while you got back 3 ways. So technically, this move ender, and it makes a 3-way back to the 76.4 of that move to the pit, right? Now, this is the interesting part. I'm an old guy when it comes to labor. You know that I'm old. Gustavo, Tony, all you guys know me in person. So when it comes to laboring, I got rules and guidelines. Like you and me and Luis, we were talking last night. One of my rules is that wave 5, and I want you, Luis, to let me know. In a 5-way move, same with ISAN, that I know you guys are very good wavers. One of the 3 is going to be an extended one. You guys agree, right? In my book, always one of the 3 imports is going to be an extended. No 2 of the 3, only 1. So if I get my wave 1, my wave 2, my wave 3, it goes to minimum the 1.618, I can expect an extended 5. You follow me? Now, you don't see an Elliott wave many times 2 extended waves. You agree, Luis, with me? You don't see it, right? 2 extended waves. You see one of the 3 extended. Now, exactly, there is no rules that say that 2 cannot be extended. But like I say, I'm an old guy when it comes to, you know me, Luis, for years. I'm an old guy when it comes to laboring. I said last night, I was thinking and moved to 131.54 to be wave 5. And then I say, okay, 1, 2, 3, 4, 5. This is 1, 2, and 3, or ABC. Now I got this win that it went to the 2618 of the previous first swing right here. Perfect. This low, it went a little deep according to my rules. I don't like it when it passed the 30-2, but I can take it. But remember, this is the 2618 of the first leg. And then in my book, or laboring, 2 invalidation. When I got an extended, I always going to expect wave 5 ended around the 618 top of a wave 3. Now, in my book, when I pass the 618, I always going to start looking for something else. You follow me? Because most of the time it's a trap. Something is wrong, right? Now, that's the first invalidation. I can list with a 50% here. Now, you can label this A, B, and C because you see 5 swings here, right? Let's go a little more in this move right here. That move, if you downgrade it from here, you can see that you got divergence in this high. And then he went very deep right here to a level. In other words, in the RSI, this low, they match the level there. And then from here, you got 1, 2, 3, 4, and 5. You didn't get divergence in that move. So technically speaking, I want you guys to draw your own conclusion. Technically speaking, it's kind of iffy right there, the 2 swings. But I can count 5 swings here the same way that I can count 1, 2, 3, 4, 5 swings here. If you take a look to this high, is the 1.618 of this first move, and then if you take a label here, is the 3802 to the peak right there. So I see two swings right here. Very suspicious, right? Now, another rule that I always use in Elliott Wave is telling me that in a three-way move, there is no divergency in the 1 hour RSI. 1 hour RSI should not provide divergency. All right? If you put the RSI, look, you see the diagonal and the RSI were defined right there. Do you see, Isaac? That's a word-defined 5-way leading diagonal. You agree, Isaac? Look at the RSI. I mean, look at the divergency on the high. 1, 2. That's what I asked you about an hour ago. Look at the RSI. 1, 2, 3, 4, 5 swings with divergency. Now, having seen that combination with the S&P, I hope that everyone is being long euro today, or you guys have been telling me personally I'm long euro, I know from here. Why? Now, let's take a look to the decline of the euro. The decline of the euro as of right now, I don't mind if I get stopped out. Look, I see a very, if you go to the 1-minute chart, I see a very sharp decline here. It can be laboring. For me, it's a three-way from here to here. I see 1, 2, 1, 2. It's tough, but well. And then from there, I see a retracement. It looks like a small triangle here someplace. And then from here, look, this mess. Now, the low comes right here, but I don't know your opinion, guys, but it looks corrective in my view. It looks corrective in my view. Now, this is sharp. This is sharp. If you guys watched the video last night, I say that this is going to happen. I knew that around 31.50, 80 area, they're going to be seller. Because you're dealing with a record, there is a record short euro. Every three-way bounce, they're gonna sell it. I don't know. I mean, it looks like it's getting complicated. The data is, we don't have enough data to know exactly what's taking place. All I know is that without looking at the candle, without looking at nothing, if I put my 1 hour RSI, I'm going to take my chances against this low right here because I know that the bouncing risk is about to happen. It's what you and me were talking, Isaac, that if it's not from here, the next one, it needs to be faded again until you got it, right? I take the chances right here. This is a very nice structure. Now, like I was talking also to Zach, that maybe we are in the first steps of the compress wave 2, when, or B, technically, when we can go higher, lower, until finally we go higher. Now, the market can sell the euro and the euro can get lower, don't get me wrong. I don't say that it's not possible. What I'm saying is that there is rules that I follow, and those rules at this moment, this telling me that this counts better as a three-way move, because guess what? If you take away the laboring, if you measure this, 1, 2, 3, it goes closer to the 618. And then if this is going to be my 4, then you got to mention the 3 from here, right? It went to the 3802 right there. So if this is one of those structures that after what happens, I said what everyone is going to say, man, it's a leading diagonal. Remember? Always is like that. Now, let's say I don't buy anymore. That is a wave 4. I believe that there is discount is also reliable. Discount is also very reliable. Discount goes like this. Discount goes like this. Discount comes like this. WS, ABC, WS. We got 3 ways here. We retreat and it's going to make another low. Very possible. I'm not denying that scenario. That the scenario is possible. This is the scenario that is going to come down to the S&P is going to go to that 1184 area. It's too early to tell. It's too early to tell, but we have to wait and see. The whole market, in some degrees, guys, is a toss. The whole market is a toss, and at this moment, in my opinion, it can go both ways. All depends, and I want you guys to understand. If it's going to be U.S. dollar strength, it's going to be minimum U.S. dollar strength. Minimum, not that much. Minimum U.S. dollar strength. There won't be no breakout from current levels. Now, what it's telling me is that it's either this one or the other with the load here. Final confirmation is this, the break on this channel is going to make the market to the upside. Now, let me show you something. You guys remember this area right here, right? That's the recovery from 131 to 142. Look how similar in some degrees look. A very recovery 3 until you get the separation. That's when you need to be on the market, when the separation happens. After the separation happens, it's a free ride. Now, you only get the separation taking risk. If you don't take risks, you're never going to get the separation. I got a friend of mine who took all this rally. Why? Like me, he tried the long here, but the difference is that he also tried the long here until he got it. So that's what I see about the euro, guys. Anyway, I don't think it's going to trade higher before lower. I got no question in my mind that the euro in the small time frame is going to test minimum it's going to test 131.11, 131.31, and then looking that recovery, we will see what the recovering is about it, and we will see if I would rather being a buyer of the euro now with a stop loss, I would say at below 129.78, that being a seller at current levels. Seller, it was last night. I told like 100 times on the room, the next high on the euro should be favorable. You guys remember, I say, hope that any of you guys did it. Because I was telling everyone when the market was here, I say, next high should be favorable. So that's my whole idea. This is, I see, the way I count the swings is this. I count it by channels. This is a channel. This is another channel right here. And then from here, you can count a third channel. If that's correct, then it's an ABC. Otherwise, you can make the case that this one right here, the fifth wedge, it have some question. Do not matter. We will know when the euro is around this level if which scenario is the bullish or the bearish. But he needs to trade 131.11, 131.31, or 131.57 before any type of decline on the euro, in my opinion. If consolidate around these lows, it's more bullish, in my view. Now, that's for the euro. That's for the dollar. Now, let's go into another pairs. Let's start with the Norwegian krone. Same scenario as the dollar. We can have three ways ending here, back, A, B, and we're going to go to the C. Anyway, the far up should be minimum. Maybe it's looking for 605. It still can be many things. What do you have from the top? I know there is no way forward anymore. I mean, I know it's no way forward anymore in any US dollar pair. This is, if the dollar is going to make another rally, it's because a wave B and C coming in. That's if the S&P is going to go to 1184. All right? Now, what do you have in the Norwegian from the top? 1, 2, let me see. 1, 2, yeah, 1, 2, 3, 4. You got a three-way here, 3, 4, and 5. So, let me see. You got 3, 3, and you got a 5 ways here. Or you can make the case of 1, 2, 3, 4, and a 5. Very ugly. Now, what is more important is from the lows. What do you have from the lows on this pair? 3 ways, clear right now. To the equal legs. Let's see, maybe it's nesting to the upside, or maybe it's correcting. I see, I don't know, I wish you guys can help me out. From the top, I can count. It looks like a 3 ways, but this leg comes with divergency. Maybe it's 1, 2, 1, 2. It's very tricky. Then 1, 2, 3, 4, 5. It looks, I can count 9 swings. 1, 2, 3, 4, 5, maybe it's a 5 ways. I mean, or maybe 1, 2, 3, 4, and 5. It can go anyways. I see divergency and I see 3 ways back. But the point about the New Zealand is that this is no wave 4 anymore in the dollar. So it's no wave 4, not in a dollar, no in the Norwegian, no in the euro. It's no wave 4 anymore. That's too big to be a wave 4. So it can be wave B with another leg of the dollar coming in. Like I've been saying, all depends of what the S&P is gonna go to 1184 or to straight out. We have to wait and see, and everyone needs to take the risk and make their own decision. All I can say is this: if you take this pair from here, this pair from here, it looks like it got, look at the RSI. What you got? 1 swing, 2 swing, 3 swing. You got a 4, you got a 5. But it's corrective because the high is the high here. You see how you don't get divergency when it's corrective? You're never going to get when it's corrected, you don't get divergency. That's been my whole point all over. When you are in a corrective move, you don't get divergency. So, technically speaking, you got either A, B, and then the only alternative is that we're going to go here to complete the last leg. And then, that being the case, what we ended here is W, we got S, and then we're going to get this. But at the end, this is going to happen. Now, this pair, and I'm talking about this pair because this pair is very important when it comes to the US dollar. Look, on the daily, again, what you have? 1, 2, 3, 4, 5 swings already on the daily. Maybe this pair will have another round and it's looking for 6 or 6. Or depend of the S&P again. But I know that either with this high or either right here, the US dollar is going to get weak. I know that for a fact. The US dollar is going to get weak. The same with the dollar. You see how similar this structure looks to the dollar. That's why I'm always telling you guys to follow that pair. Look, very same structure. No matter what it is, from here or from here with the next high on the dollar is going to get weak. All right? Now, let's go into the metal pairs. Let's start with the dollar CAD, one of my favorite pairs, as you guys know. Dollar CAD, 4 hours. Very interesting pair. We keep the entry that we have. We're going to leave it there. Now, very interesting pair. Why? What you have from here, maybe a possible 5-way swing. I knew that this is 3. What you got? 5, 3, 5. Now, like I said yesterday, 2 ways on the dollar CAD. Depends on what? Of the S&P. What we can have from there? We can have, hello? You guys have sounds? Yes? Okay. Two ways on the dollar CAD. Either it's going to make another 3-way to the high and lower, or it's going to drop from here. short time frame, what it did today, 5 swing from the lows. 1, 2, 3, 4, 5 swings. What do we need now? Either we need 3 back, 1, 2, and maybe it's going to get 3 here and go higher. And then you got to take a look at the equal legs. Equal legs is calling for 103.40 from around the 618. This is can be, I'm expecting also the S&P to trade lower. If you follow the S&P, I don't think that the correction is over in the S&P, to be honest with you guys. If you take a look at the small time frame, look, S&P is giving now a new high. Let me see. 1042, 1042.68, 1042.63, 1042.82. Like I say, it's testing the high again of yesterday. 2 scenarios. Maybe go lower in a flat, maybe go higher. Who knows? All I say is, if I see that the new high comes with divergency, that's telling me that the euro, after a rally to 131.20, then should drop back and test the lows and make a new low. Like I say, everything is open right here. Everything is open. All I say is this. A guarantee is this, that you have 5 swings followed by the corrective structure. This can take many ways. It can go here now and higher, or from here, or maybe this is W and in a 3-way, and we're going to test even higher to around the 1252, and from there drop back again. Maybe this is the S wave or W. Nobody knows for sure. All I know is that this is bullish, and all I know is that most likely 1292 is gonna be taken. And then I gotta keep that in mind before drawing conclusion of what the market technically is gonna do. I know how to get to 4. I know that I'm gonna get to 4. How? I don't know. Now, Aussie. If you notice today, in every pair I place a note like this. Can go both sides depending of the S&P. Because technically, guys, that's the reality there. Aussie, it did 3 ways back here, and right here I see 5, 3, and another 3. So 3 and 3, what you're gonna take out of it? It's either a triangle, it's either a double zigzag to the downside. Nobody knows. It can go both ways depending of an S&P. Now the question is, Aussie from 102.20 high. Let's take a look right there. That's what really matters. The rest do not matter, to be honest with you. One second. Any question, guys? You guys can be pressing the question there. I will be answering for you guys. One second. But you guys understand it now, see. 3 and 3. Now, it loses importance to the outside. I'm bullish Aussie in the weekly, so don't discount the scenario when we're nesting or anything like that. You see, 3 and 3. Now let's take a look at the 5-minute chart from the drop. It looks, I can tell you, it looks like a 5. It looks like it did a 5-way swing, but also it's calling for U.S. dollar weakness. Maybe the S&P after all is gonna drop. It looks like, if you look at the CAD, if you look at Aussie, maybe the S&P, it can drop. Now, this looks like 1, 2, 1, 2, 3, 4, 5, 3, 4, and a 5. It's a clear 5-way move in Aussie, which is telling me that it's going to trade higher to around 101, 101.55, and then it's going to trade lower again. And then, you agree with that, Zach? Now you're asking me. I see 5-way from the top, even better than the cap. Now, on the daily, how are you going to put that on the daily? Maybe we got here, and then maybe still now it's going to test lower here before higher. Or 5 on way to 7. That's a good one. That's another thing, guys. Remember, to get to 7 ways, you need 5. Everyone get excited when they see the 5 ways. But I don't know, from my experience, all 5 ways have a similar stroke to 5 ways. I can smell when I see something wrong right there. But the Aussie 5 ways looks pretty good. Now, you gotta sell today, tonight. I believe that the euro is gonna trade higher, and I believe that Aussie is gonna trade higher. If you are a waiver, you gotta take, if this low whole, you gotta take a short in Aussie around 101.50 against 101.20. You gotta take it. This is a clear 5-way move after a 3. You gotta take it, Zach, in my view, if the low hold already. Now, that's Aussie. Let's take a look at the Singapore dollar. 1 second. To be honest, guys, the market has been moved, thank God, for the last 2 days, no Monday. Look, like I say, we got a one that ended here, and this amazing structure that we're getting here. Look, this is a clear 3-way move, a questionable 5, another 3-way move. This is 3-way move by the book. Look, 3 ways there. Look at the RSI. You see, in this low, we got divergence. That's why I can take it as a 5 in the 4 hour. But right here, the high is the high, so there is no divergence. And now we have another questionable low. Now, I mean, it can be nesting, or to be honest with you guys, I don't even know in some degrees what it's doing. I mean, it holds the trend line right there to the pit, but there is no trend line right here. It went below that trend line. So, I mean, if it's a triangle or anything, triangle cannot be wave 2. Maybe this is not 1. Maybe this is wave A. Now, short time frame, let me give you the insights on it. What I see is 5 swings, 1, 2, 3, 4, 5, 3 backs, and another impulse. I see 1 on A, 2 on B, and now this reaction. The market can be nesting. All the pairs is amazing. It's a very, very hard market to trade. That's all I can tell you. Look, this do not look like a three-way. It looks more like a nest. What do you think, Louis? It looks more like a nest than a three-way, in my view. Now, from the lows, guess what you got? Another 5 waves. 1, 95. From the lows, you got another 5 waves with divergences. So the dollar strength is a given very soon. But I believe that before the dollar strength, we're going to see some US dollar weakness. Because if you take a look to this pair, 5 wave from the lows. If you take a look to Aussie, CAD, Aussie, Singapore dollar, CAD, and New Zealand, they all run very similar. All those pairs, and the euro even, all those pairs is telling you that it's going to be some US dollar weakness before some US dollar strength. So the Elliott Wave edging is the most powerful things, you know what I mean? I would say that if you long risk right now, hold it for a while, because all these pairs needs to trade lower in favor of risk a little bit more, and then all those pairs, they should switch back and make another run in favor of the dollar, in my opinion. And then from there, let's wait and see. For example, this one, you gotta wait for this level, around 130.15, 130.46, depends on how deep it goes right here. If that level pass, then you're gonna go about the 131.23 area. That's how I see it. Everything depends on the S&P. Now let me show you the euro pound. This pair looks like look at this pair already. This is in the 90-minute chart. Look at that pair right there. What that pair is telling you. What that pair is telling you, that sometime a dollar strength is going to happen. Euro strength most likely is going to happen. Look at the divergence right there. Now, doesn't mean that needs to be tomorrow. It means that is going to happen. In my 4-hour, this pair, look, we are ending a big cycle that start at the October 28 high. We got to the equal legs of the cycle today. This is in the 8-hour. Look, you got divergence even in the 8-hour right there. So a huge bounce is coming. When the euro, usually when the euro around cable, anybody there knows what that means? When the euro around cable? When this pair trade higher, anybody knows what it means? Exactly. It means risk on. Now, this is the daily. Look at the cycle that we're ending here. It's in October, like I say. The cycle that started in July, it makes 3 ways here, 3 ways back, and the equal X is 87.78. So that's a huge cycle. Look at the channel there. I mean, if you're going to get long, now's the time around this level to start getting long this pair, because this pair is going to correct this whole horrible overlapping cycle that took almost half of the year. It's coming to the end, and it should happen at any moment. This is the daily chart, right? Very clear from here, look. I know. That's a good one, Louis. Now, if you take a look to the RSI, from here, like I always told you, trade the trend lines between the highs. You see it there? It broke higher. So the cycle, this is a cycle. And then you got the other one right here. Right there. So technically you have 3, 3, and 3 that is coming to the end. Euro pound is going to bounce. Don't tell me, Gustavo, I know you love this pair, that I didn't tell you. It's going to bounce, and it's going to bounce in a big bounce, minimum to 86 area. On the weekly, look, same scenario. We are going from this bounce before another 3 legs to finish the whole cycle. All right? Now, let's talk about the dollar yen. We don't talk about that pair too much. The house on pain. Look, this is the daily and the weekly, I'm sorry. One more low is due to complete a cycle that technically started on 2008. A textbook huge ending diagonal there. Now, as it's a 10-minute move, what do you think you're going to get? You're going to get a triangle someplace. Okay, right here. There you go. In the 4-hour chart, look, you got the triangle there, which is taking place. It looks like you got A, B, and then 1, 2, 1, 2, 3, 4, 5, 4. A 3-way move here, 3 backs, 3 backs, 3 backs. I don't think that this is D. I think that this is part of the B-wave flat with another test, house on pain. This is a good area to serve this pair. A good area to serve this pair against this high, 78.28. If you got it right, you can make a ton of it right there, because it's gonna trust to below below this low. I believe is a given either from here or from higher. I like it like this because the trend line on the dailies and on the weekly is above the trend line. You see, this trend line is there. Look at the divergency on the weekly, guys. Look. So this is a dollar move right there, in my view. Now, any question, guys, that you guys have? My whole point is that everything depends on the S&P. That's a good one, Dwayne. Everything depends on the S&P, and that if the S&P wants to go higher from current levels, risk trades on. Aussie yen, very correlated pair with the S&P. It's the same scenario, Dwayne. What you got? 3 bags after a clear-cut 5-way swing. 1, 2, 1, 2, 1, 2, a 4 and a 5, a 4 and a 5. You got 3 bags now to the 618 to the pit. Look, to the peak of the 618. Now, right here, it can be either nesting or this is A. We are on the B way going lower. If we're going lower, it's going to trade lower to around 75.81, 76 area, which is the 76.4 area, and then high. But no question the high. After 3, if you want to see what the S&P is doing, this is the pair. You understand? This pair is very, very well correlated with the S&P and risk. I know Lewis loved this pair. It looks like the S&P can be on the flat. Don't get me wrong, it can be on the flat. Don't get me wrong. And that way my good friend DV is going to be happy. You heard that, D, right? He's going to be happy. Any question, guys? Any other pairs that you guys? So in general, guys, I can tell you this. I'm going to have a better idea about everything later on today. I do believe that the S&P is either in a flat or going higher. Depending on the S&P, exactly, you're correct, Clifton, that's correct. If Euro pound is bullish, then risk is on. But maybe have a little more downside. So, I would say this. Somebody asked me why many people missed the move, sometimes including me, is because traders, as a human beings, including me, sometimes we try to be perfect. Now, again, like I say one more time, what do you have? A bullish S&P and a US dollar that is showing 5 swings when the fixed swing is giving you divergency on the dailies. What do you have? A record short on the euro pair in contracts. What do you have? A lot of bullish risk structure. A cycle in euro pound ending. A bullish oil. So all I say is any move to the upside in the dollar is going to be limited. This is not the real breakout that people waiting. I don't know when it's going to happen. I'm sorry. I wish I can know. Any question? But you understand, Clifton, what I say, right? Anybody have a question about any pairs that you guys want? I think so. If you look at the Aussie, at the CAD, the New Zealand, it looks like it's possible that we're gonna see a seaway in the dollar. In other words, instead of the dollar ending right here, that we can make a run to the 80.95, even 81.50 area, and test the trend line for the third time before going lower. It looks like. Now, the euro, I believe that most likely tonight is going to trade higher to minimum 131.50 and 131.20 area. When he gets there, I will know if it is one of the other, and I will let you guys know on the room. Okay, guys, if there is no question, so that's the seminar. Be ready. Any U.S. dollar strength should be limit. It can happen. We can have another high on the dollar without doubt, but you have to keep buying the dollar on to prove you wrong in some degrees. Or don't buy the dollar at all and wait for the final confirmation from the lows, or from the highs in the dollar. But all I can say is this: a bounce in the dollar, a bounce in risk is around the corner. All depends of the S&P which way it goes. Any question, Luis? All right, guys. So let's leave it there. I put the recording later on. Thank you.